Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dong Jokson, Tony. Now let's start today's group discussion. Good evening. First, let's look at the economic data that's about to be released, but there's still a few minor issues. Also, today we'll be talking about the recent pressure on Oracle. That's just one of the topics. It's a bit much, but I might have some good news to share with everyone. First, let's take a look at the U.S. federal government. In fact, in the U.S., after Trump signed a temporary funding bill last Wednesday night, the government finally reopened. So this time it was 3 days, which is the record for the shortest shutdown. The second record is 35 days. As for breaking the old record, only Trump could surpass Trump. The second record was set by Trump during his first term. And now, during Trump 2.0, he officially surpassed the 1.0 record. Let me explain to everyone. Reopening the US government is a slow process. The restart can take quite a long time. So what's the main reason for that? Federal employees will indeed return to work, that's correct. But the problem is, some services, like the simpler ones, such as national parks and things like that, will reopen and people can go in right away. However, the issue is with things like application cases, for example. Those are a bit more troublesome because during the shutdown period, there might still be people submitting things in person. You have to consider some services deal directly with the public, and some applications might be submitted online. And for some service units, the applications are sent up from the state government. Even if the federal government shuts down, the state government doesn't, so there will be pending cases in this area. It's expected that it will take some time to fully get back to normal. Another issue is the impact on air traffic control, which I think is significant. This was actually a key reason why Trump and both sides were willing to compromise in the end. Why is that? Because, well, the airlines started to cut flights due to staffing and scheduling issues. This happened around the week of October 17th, and that week ended on either the 21st or 22nd. Next week just happens to be Thanksgiving, so the reason everyone was more anxious before was because of plane tickets for the Thanksgiving holiday. Normally, a lot of people would have already booked their tickets about a month in advance. Actually, even a month ahead is considered kind of late. Many people actually book 2 or 3 months ahead. But there are still some people who only try to book their tickets last week or this week, so when you find out that flights have been reduced, some people who already booked get notified that their flights are canceled. That can really drive you crazy. So this is actually a pretty big problem. So here, they say that things here will gradually improve, but when it comes to the release of economic data, this is actually a bigger issue. There are indeed delays in publishing, but what's even more concerning is a complete data gap, meaning the data just stops coming. So what does that mean? Let me explain it to everyone, but before we get into that, let me mention something first. This appropriations bill is a temporary measure. It's only a temporary bill that will last until the end of January next year. So before the end of January, both parties, Republicans and Democrats, will still need to continue negotiating, and there are still some key votes on important bills that need to take place. So there's still some uncertainty left in this area. Looking at it now, hopefully we won't see another government shutdown in January. If that happens again, it would be a huge blow to the ruling party, the Republican Party in the US. I think Trump is he'll try his best to avoid another government shutdown, but that means he'll have to start making compromises. As for the latest economic data releases, the schedule is actually moving very slowly. For example, the CPI for September is only being released on October 24th and 25th. There are only a few numbers left, and in a moment, I'll show you a table that clearly lists the release dates. Why is the September CPI being released on October 24th? It's because the US social welfare spending needs this number as a benchmark to set next year's spending. This is important because many The basis for increasing these subsidies is the situation where the CPI goes up. If this number isn't released, social welfare benefits can't be distributed. And, by the way, this doesn't refer to things like food stamps. It's even more fundamental, like pensions. If this number isn't published, honestly, there would be a revolution in the US. So what's really important here is, aside from this number, the only major data left to be released is for August. The August part-time spending will be announced on the 17th, then factory orders will be released on the 18th, and the trade balance will be announced on the 19th. Also, last Friday, part of what drove the overall market sentiment was the announcement that the September employment report will be released on the 20th, which is this Thursday. So that's something to watch. The market is quite upbeat because this number will be released. In addition, as for other important data releases, we want to let everyone know that some of them are not yet confirmed, but if you check, you might see some could be announced. For example, the number of people employed in the service sector is scheduled between September 7th and November 8th, and then there's September retail sales and the PPI for both September and October. And then the CPI for October, actually the CPI that was just released is for September. Then there are factory orders and the PCE for September, as well as the preliminary GDP figure for the third quarter and industrial production for September. Now, we want to highlight the main issue for everyone here. These are some of the more important figures overall. The key agencies during this shutdown period, well, it just so happens that all of them are federal agencies that have shut down. For example, the Bureau of Labor Statistics, the BEA, the Census Bureau, and even the U.S. Treasury Department. Anything related to taxes or import and export data, these are all federal agencies that have suspended operations. Now, there's something you need to be aware of. After the government restarts, it may take some time for these data releases to catch up. They'll start to release and publish the data retroactively, but the problem is that some of the data, like those that required phone interviews or face-to-face interviews at the time, if those weren't conducted, then you can only use statistical methods to estimate the results. But using estimates will lead to a drop in accuracy, so for the data in the coming months, you should expect frequent revisions. For example, when you look at trade figures or construction-related numbers, it might show an increase this month, but next month they might revise it downward, and then the following month revise it upward again. Why can't it be accurate? That's just how it is. Missing data is a big issue here, so I want to point this out to everyone. The release of foundational data will start to happen very slowly, and as you'll see later, this week there should be a series of supplemental data releases, but at the same time, the central authorities will also face the problem of declining accuracy, and people will question the reliability of your data. So this is a really troublesome issue. Will this problem be solved? The answer is yes, it will be solved. How? Well, if the numbers for September or October aren't released, but you have the data for November and December, and then as time goes on, say into next year or even longer, more data gets released, the missing 1 or 2 months of data can be filled in. Okay, so in the past, the simplest way we handled missing data was to use interpolation to fill the gaps. You can think of it as using this concept to make up for the missing numbers, and as time goes on, those gaps will be filled. But the problem is, right now, you just have to wait, so it's really inconvenient. So everyone might just have to be patient. Just be patient for a bit. For example, this week, as we all saw, the industrial production and factory orders data will be released tomorrow. As for the trade balance, the Federal Reserve is not affected because only a few of their numbers are impacted. Things like meeting minutes and such are actually not affected since the Fed has an independent budget. Then, on the 20th, the number of people applying for unemployment benefits will be announced, and also the employment report, the September employment report, which is, of course, the most important thing for the market. As for the leading indicators in new home sales, well, several government data releases might be delayed. We'll see a chart about that in a moment. The PMI and University of Michigan Consumer Sentiment, which are both released on Friday, are not affected because both of these are surveys conducted by private organizations. They will continue to be released. Now, I want to point something out here. You're not seeing it wrong. That October 20th to 20th you see there is actually just how it was pulled from the original document. It's just a typo or a placeholder. It's just to fill in the numbers, you know, and then there are things like housing starts and retail sales. Of course, the most important among them is still retail sales. That's the key figure here. Then there's the trade balance for goods and durable goods orders. These are all relatively important numbers. I'll talk more about these important numbers in a bit. First, this set of numbers is about to be released, so on Thursday or Friday, we'll need to spend some time on this. Let's take a look at the situation with the numbers being released. I also want to mention that sometimes if you look back at these numbers when they're no longer timely, it can feel like something's missing, like it's lacking a bit of flavor or punch. That's what kind of feeling you might get. And there's another thing. When 2 or 3 important data points are released in a single day, everyone will be watching these numbers closely. Exactly, especially if there's only a standalone number, just a single figure or a single set of numbers, everyone will scrutinize it very closely. But once you give me 8 or 10 sets of data at once, people might just glance at the results and then wait, thinking, well, you'll revise it later anyway, so I'll just wait and see. So on the contrary, this might actually reduce the impact that economic data has on the market, or on the financial markets in general. Unless the data shows a really significant jump up or down, it probably won't have much effect. So that's something we want to remind everyone about as well. Let's talk about Trump first, since there are a few issues to cover. We'll circle back to the Fed later and then discuss expectations for rate cuts. So Trump currently has a few problems. The first is the Epstein case. Over the weekend, Trump got dragged into this mess again, basically the Epstein thing. If you recall, there was a wealthy businessman who was specifically... the details of the case have already been made public. To put it simply, it was about brokering meetings between wealthy businessmen and underage girls for sexual encounters. Because these girls were minors, or for other reasons, there were some that used strange methods or even human trafficking to achieve this goal. The operation was based on a small island in the Caribbean, and many prominent figures visited there. Now, Trump was a wealthy businessman in New York, so of course he knew this person. That's why there are all these complicated connections that people are questioning. Actually, this issue was stirred up by Trump himself, because last year, during his campaign, he said he would make the details of these cases public, but when it came time for him to be elected, he started to be evasive and hesitant again, which led to public suspicion. Finally, on Sunday, he said, first the US Department of Justice announced an investigation, and then on Sunday, he said he could make it public. This was a major shift in his stance. But the problem is, starting from about Friday this weekend, most of the major US media outlets have been focusing on this news. In addition, Trump has a few other troubling issues. I'm mainly talking about more recent events. The first one is, like we mentioned before, there was that regarding the US tariffs, the court hearing has already taken place, so we'll pay more attention to it when the verdict is announced. Another issue is Venezuela. The USS Ford has already arrived offshore, and besides the Ford, there are about 19 warships in total. Each of these warships has several thousand personnel on board. There are already hundreds, even thousands of people gathered there, but just piling up like that? Well, if you really want to fight or not, there probably needs to be some kind of progress. Although there are rumors that Maduro is willing to negotiate, for now, let's just wait and see. Even if he wants to negotiate, then he should hurry up and get it done. Otherwise, the Venezuela issue is actually a big headache for Trump to deal with, especially since there have always been rumors that the US military might directly intervene and launch an attack. With Venezuela, this attack isn't just about airstrikes. He would actually send troops ashore. Now, that's a much bigger problem. Once fighting breaks out, the uncertainty becomes very high. You can't be sure that the objectives he sets for the operation will be clearly defined. And you don't know whether it'll take 3 days, 3 weeks, 3 months, or even 3 years to achieve that goal. So once the fighting starts, it will have a huge impact on the entire military operation, and it could easily spill over. So in this case, I think Trump has already deployed a lot of troops over there, but the problem is he still hasn't made a decision. At the same time, let's come back to another point. Since people have criticized us for being too tactful, let me just say it directly. The relationship between China and Japan recently, especially over the past week or so, has taken a sharp turn for the worse. No matter where you stand on this, I can only tell you that when Trump might be focusing more on the Americas, like Venezuela, suddenly something unexpected happens in Asia. I think Trump must be pretty unhappy about that. And more importantly, if the US military really gets involved in dealing with Venezuela, that means the US military is officially entering the fray. This means that if something happens, the US military might not be able to spare too many troops or devote too much attention to Asia. This is a huge variable, so please keep paying attention to it. As for this situation, if it ends up affecting the financial markets, we'll keep tracking it. If not, just consider this a heads up. This is an unexpected risk, and it could become an issue sometime between now and the end of the year. This risk will still be around. It probably won't disappear so quickly. Just a reminder for everyone. What's more important is that last Friday, there were a few Federal Reserve officials who spoke. The ones in green basically indicated that they might not want to do this kind of thing. For example, Jeff Smith, and Sass, these officials. Previously, the female branch president before Constas was named Esther George, and she was very hawkish. But unexpectedly, the person they chose, Smith, turned out to be even more hawkish than I imagined. He mentioned that further rate cuts could deepen the risk of high inflation rather than effectively supporting the labor market. So from this stance, you can already tell, here's another person who doesn't really want to cut rates. Now, Mester, of course, is one of Trump's people, so naturally he keeps pushing for rate cuts. What he said later on was actually more important in my opinion, and I'll talk about that. For example, housing inflation shows that price pressures are easing. Okay, and monetary policy needs to be forward-looking since data is always lagging. I think his main point is that you have to look ahead, but the problem is, well, most of the Fed officials who try to look ahead still think that inflation should be the main concern for now. So I feel like it's hard to make a difference alone. Also, Lori Logan from Dallas hinted that unless the data shows it's necessary, she won't support another rate cut. Yeah. And then there's Atlanta. He just said a few days ago that he wants to retire. He's going to retire in February next year. For the 2 rate cuts this year, he voted in favor both times, but he said he hasn't decided yet whether he'll support the next one. That's also a relatively hawkish statement. So you can see here, overall, the FOMC officials are generally more cautious. They're leaning a bit hawkish, even though, as we mentioned, the market on Thursday and Friday seemed to react somewhat to these numbers. The drop wasn't that big. But we have to say, there are still some issues here. So first of all, let's talk about this. According to the reports, the question is whether there will be another rate cut. The Federal Reserve, when they look into this, believe that the divisions are deepening, which means there's more concern. And this also reflects that the current economic situation is not easy to interpret. And then monetary policy? There's no consensus on the direction of monetary policy. It's very hard for Powell to form a consensus here. Actually, it's not that difficult, and it's not impossible either. But from Powell's perspective, he's stepping down in May next year, so I think he won't forcefully push any particular agenda. He'll just let things take their course, and honestly, he's probably happy to take it easy. Now, we need to specifically talk about this. I'll explain the changes in interest rate cuts in a moment. For now, let's quickly look at a few pieces of news. The first is that Barclays strategists believe that they think that Treasury purchases will begin in February next year. The reason for this is actually a matter of liquidity. Personally, I think the timing might even be a bit earlier. I feel like once December ends, it could start as early as January. Why? Because recently, the liquidity in the US market is actually pretty tight right now. But if there's gonna be an injection of liquidity, it's probably up to the US Treasury, not the Federal Reserve. However, the Fed could play a supporting role here, and I think it's quite possible that before long, they'll really start buying Treasury bonds. Now, let's talk a bit more about this. I think there's something you need to be aware of here. This time, it's possible that there will be a pause in rate cuts. I'm not saying rate cuts will be terminated or ended, but there could be a pause. So, for example, if you look at this, the extent of the rate cuts, this is more than one, meaning a rate cut of more than 0.25%. You can see this was the expectation at the end of April this year for the end of the year. This shows the changes since the contract was first opened. Back in April, maybe it was because of the government shutdown or the tariff storm, and people thought the economy would take a big hit. So at that time, there was an expectation that there could be up to 4 rate cuts by the end of the year. But now it looks like it's not even 0.5, not even half a rate cut. There's barely any chance of even a half-point cut. You could interpret this as There's only about a 0.50% chance of a single rate cut. Okay, but so what I want to tell everyone here, and this is really important, I think there's still a possibility that they might pause and cut rates just once. Why? First, the attitude of Federal Reserve officials, most of them lean more towards being hawkish. Second, the economic data, which is actually related to what I mentioned at the beginning. The first set of data has been released, but its quality isn't very good. Then it takes time to verify the data. And even the White House itself has said that since the data hasn't been released, the Fed is basically flying blind. So flying blind, well, I think you need to be careful. The Fed might actually have a reason. And it's possible they'll tell you that because of missing or incomplete data, they don't have enough information to make a decision. They might need to wait for another meeting before making a decision. This is a real possibility. If that happens, the market might be a little disappointed, but it wouldn't be pessimistic because it's not like they're saying they won't cut rates anymore. It's just that they're pausing for one meeting. So this could lead to some short-term market fluctuations. I want to remind everyone about this risk again. Also, there's some other news from the US. Trump has lowered tariffs on coffee and other food products, mainly to ease voters' concerns about rising prices. So here, when we look at tariffs along with this, so regarding the government shutdown, will it have an impact on overall economic growth? The answer is yes, it will have an impact. And after the tariffs are imposed, since it's like a shotgun approach with retaliatory tariffs going back and forth, many products are affected. As a result, a lot of items are starting to get more expensive or even become unavailable. As for Trump, last Friday, the main thing was lowering tariffs on beef, tomatoes, coffee, and bananas. So if you look at these items, they're basically things you can find at Walmart, stuff people mainly go there to buy. Now, there are going to be a bunch of issues with this, and the most controversial one is the beef tariffs, because if they start importing Argentine beef, American cattle ranchers are definitely not going to be happy about it. But the thing is, the price of American beef is just way too high right now, really high lately. There are a lot of factors at play here, and I think Trump probably has no choice but to lower the tariffs. Now, about coffee, Americans really love drinking coffee, even though American coffee doesn't taste that great. But yeah, Americans really love their coffee. A lot of the coffee in the US is imported from Brazil, and because of Trump's policies and his relationship with Lula, he slapped a 50% tariff on it. So now coffee is really expensive, so he has to find a way to fix that. As for bananas, they're mostly grown in Central America, so that's another thing he's trying to lower tariffs on. So that's the situation. What I want to tell everyone is that this is reflected in everyday necessities. While food inflation or these kinds of inflation might not have a huge impact on the CPI, the problem is that it really affects daily life. So Trump has already started making compromises here. He has no choice but to compromise, regardless of whether he can save face or not. Trump has always been someone who values substance over appearance. Of course, it's best if he can keep his pride, but I think at this point he'll prioritize practical results. This will help his poll numbers rebound next year. And in addition to that, he also lowered taxes for Switzerland down to 15%. Of course, at one point, his relationship with Switzerland wasn't that great, but they negotiated, and in the end, it was settled at 15%. That's not surprising, but just because you see Switzerland at 15%, don't assume we'll also become 15%, okay? So what's the biggest difference between us and Switzerland? First, they're white, and we're not. Our skin color is more similar to each other. Second, if you look at our products, they're competitive. The US basically has no choice but to buy our chips and semiconductor-related products. So that surplus that's sticking out like a sore thumb, of course Trump finds it an eyesore. So we shouldn't think that we can just be like them and end up at 15%. It's not that perfect. Also, the vice chairman of JP Morgan, Ping Tu, mentioned that he's going to meet with the Federal Reserve in December to discuss Basel, not BIS, sorry, Basel. The implementation of Basel III. Because later on, we see that the Lin Wei version is pushing for higher capital requirements again. I think this is where the real tug-of-war will happen. If they manage to negotiate successfully, this will be a positive for financial stocks and a boost for the US market. Just letting everyone know. Next, let's look at the second topic, the pressure on Oracle. Recently, Oracle has been under pressure again because after already issuing bonds before, they're planning to issue another $3.8 billion in bonds to invest in AI infrastructure. So overall, the pressure is pretty significant. Now, their total debt has also surpassed $100 billion. It's at $104 billion. And there's $18 billion in company cash on hand, but of course there are also some other loans and such. So here, they're increasing the issuance by $3.8 billion, which is the part that people are really questioning. Now, the story with Oracle is that at the beginning of September, they signed a $30 billion 5-year infrastructure agreement with OpenAI in Europe and the US, which caused their stock to surge. But after that, people started to scrutinize the details more closely. They found some issues, so the stock started to pull back. The main thing is, these doubts even led to questions about AI stocks in general. Of course, the concern is whether spending on infrastructure resources can really translate into a profitable cash flow model. These doubts have expanded to include Facebook and Microsoft, and even Amazon and Google have been affected as well. The second issue is that the debt ratio has started to increase, so there's a question about whether their ability to repay debt is becoming a problem. Let's take a look at this. Is Oracle under a lot of pressure? Actually, yes, because its 5-year CDS has clearly risen and already surpassed 100 basis points. Why is the 5-year CDS so important? Because US bond companies usually issue 7-year bonds. So if you issue a 7-year bond, not long after it's issued, people use the 5-year CDS to monitor changes before maturity to assess your default risk. You can see in the chart below that the pace of increase is really fast. It just shot up, boom, boom, boom. Starting from early October, it kept climbing. Comma there. Here, of course, this reflects the situation. Let's take a look at why that is. It's actually about their cash flow. Let me explain this part to everyone. The black line represents their Q3 2025 data. We can see that it's this the black line represents cash from operating activities, and the orange line is cash from investing activities. Then financing, that is borrowing, is also shown. You can see there's a change here, and the gray area at the end indicates it's an estimate. You can see that up until the third quarter, the cash from operations was more than sufficient. Also, investments were still ongoing, because usually starting from the second quarter of this year, capital expenditures began to increase. But the problem is, when you look at the fourth quarter, you see first that the operating cash flow seems to drop. Not that it actually drops, but rather the money they earned was used for investments, so the available funds decreased. Borrowing, or rather investment activities, are still ongoing, and the amount of borrowing will increase. So why do we see that the amount of borrowing isn't estimated later on? It's because people think the visibility is lower, and there are fewer analysts making estimates for this. So that's an issue here. Actually, I need to be honest with everyone about something now. The problem with Oracle is that when they announced the deal, the details were too vague. So after the initial jump in price, people started to notice this issue and began to question it, causing the stock to drop all the way until last Friday when it rebounded. Up 2.43%, and it found support at the 200-day moving average. Now, let me tell you something. If you look at where it has returned to the 200-day moving average, and then look back at the price levels above $200, you can see that's roughly where it was before the rally started in June. No, not the spike in September, but around mid-June, that starting point of the rally. So from the perspective of the index, I think the benefits from the previous overdot situation have now been completely offset by the current doubts. Now, facing these concerns about debt, I think the correction might pause a bit once it reaches the 200-day moving average. To put it simply, after this correction, it might take a short break, and we should wait and see for a moment. So why do we say this? First, let's look at Oracle's pre-market performance. Basically, after a big rebound on Friday, today in pre-market trading, it's hovering near yesterday's closing high. That's from a daily chart perspective and also from the minute chart as well. But there's something we need to mention here. As we said earlier, Oracle is going to announce its earnings report on December 9th, and the expected time is around 6 o'clock, though the exact time hasn't been released yet. With the earnings report coming out on December 9th, let me share my thoughts with you. If you've made your own calculations and projections, then on December 9th, you should address everyone's concerns clearly. During the public earnings call, the analysts present aren't going to just let things slide at this point. If they're awake, they'll definitely ask these questions, and he'll have to answer them. If you can convince everyone, then of course you'll pass the test. At least your company, Oracle, will pass. As for whether the AI industry as a whole passes, everyone will be watching this week. On the night of the 19th or the 18th, today's the 17th, so the 18th and 19th, on the night of the 19th or Thursday morning, NVIDIA will release its earnings report. And of course, that's... In terms of the development of the entire industry, I think I still need to tell everyone that maybe this time... Last week, we saw that US tech stocks seemed to have a strong rally, which felt pretty good. But I think you might need to wait a bit longer. The consolidation period could last a little longer. Why do I think this? It's because the previous AI narrative started to break down when it got to Oracle. One part of it was broken. So now for the market to move up again and for people to let go of their old doubts, we need a new narrative. A new story is needed before things can rise again. So what exactly is this new thing? I don't know, and honestly, everyone is just waiting to see. But since it hasn't happened yet, you can't just say, oh, maybe we've made it through. The rebound on Friday might just be telling you that tech stocks could be shifting into a high-level consolidation phase, rather than actually gathering for a bottoming out. All right, so this is good news for the index and also good news for overall market confidence. This is still a positive development. I just want to tell you not to be surprised or expect a rapid V-shaped rebound. It's more likely to be a period of consolidation, and then you'll start to see individual stocks performing. That would be a pretty good situation for development. Also, let me add a bit about this week's corporate earnings. Of course, the most important one is NVIDIA, which we'll announce after the market closes on the 19th. There's a special feature this week. There are quite a few retail and so-called apparel discount companies reporting. Apparel discount is actually a type of retail as well. On the 18th, it's Home Depot, which is in home improvement. The next day, the 19th, so Tuesday is Home Depot, and Wednesday is Target, which is also in retail. Then there's Ross, which is a competitor of Home Depot, and also TJ Maxx. And then you can see Ross, iOS, and these are discount stores. Also, as for tech stocks this week, there are just two, both reporting a bit later. One is an old networking company, and the other is NVIDIA. These two are the most important ones. And then, retail giant Walmart is also releasing its earnings report on the 20th, and that's actually pretty important too. Why? Because Walmart's market penetration in the US is just so high. And it's also a huge retailer, right? So Walmart's earnings report and what they say can actually impact overall confidence in the economy. Don't think it doesn't matter, okay? Also, there's Gap, the clothing retailer, then Copart, the auto auction company, and BJ's Wholesale Club, another big box retailer. So the highlight of this week, besides NVIDIA and aside from Palo Alto Networks, the main focus this week will really be on the retail sector. So among them, the most important ones are, of course, Walmart and then Home Depot. So everyone, of course, I'll be keeping track of all these for you this week, so there's no need to worry, okay? And in other US stock news, Google has announced a $44 billion investment to continue building data centers in Texas. This is still a positive piece of news, but I want to point something out to you. What I just mentioned about the so-called narrative logic is exactly like this. This kind of new investment, maybe a month or two ago, would have been considered really good news. As soon as people saw it, you could pretty much guarantee that Google's stock would surge. But the problem now is, it's not just about why people are questioning your cash flow management. Actually, it's not only Oracle that's being scrutinized. Every company is under the microscope. Oracle just happens to be in a weaker position, so it's being singled out. What I want to say here is that looking at Google's situation right now, this is just an example to show everyone that this isn't a new narrative, which makes things a bit tricky. For real change to happen, we need a new narrative, a new story. Only then will people start to shift their current perspectives. And besides that, let me share another little story with everyone. So the Financial Times reported that a White House memo accused Alibaba of helping the PLA carry out operations targeting the United States. Now, if you just read the Chinese media, you might see this and immediately think, oh no, Alibaba's done for. But hey, let's look on the bright side. There's a but at the end. So what's the but? The Financial Times said they couldn't verify it, really had no way to confirm if it was true or not. So then why did you even write this in the first place? Of course Alibaba came out and denied it. Who would ever come out and admit to something like that? All right, so I can only tell everyone that this is just an example, okay? Sometimes when we read the news, we really need to pay closer attention. Sometimes the key information is hidden in the second or third line before you actually spot it. The Financial Times said they couldn't verify it, so basically it doesn't really count. All right, next, let's take a look at how the market performed. On Friday, the US dollar index went up a little, and it continued to rise on Monday, but not by much. Basically, it's being held down by the 200-day moving average. I think right now it's still in a sideways consolidation phase. Also, the 2-year yield is rising here as well, mainly because US stocks have rebounded and UK government bonds have surged. They say that UK government bonds surging has also pulled up US treasuries. The reason for the spike in UK government bonds is that it's mainly due to concerns about the UK's fiscal issues, which have made the market's confidence in it pretty weak. As for the UK's finances, well, honestly, they're about as bad as France's. They're really weak. Germany's finances are a bit better, but not by much. So looking at it this way, it's dragged down US Treasury yields as well. The 10-year bond is seeing a similar situation. Oil prices jumped 2.19% on Friday, but turned lower on Monday. So why did they surge? It was because Russian ports were attacked by Ukrainian drones. And after the attack, oil production was affected. So production capacity took a hit, but exports weren't suspended. So everyone thought supply would tighten, which pushed oil prices up sharply. But if you look at it, this surge only lasted for a day or two. I don't think it's going to be a long-term trend. In terms of the overall trend, it's not really a trend. It's still in a sideways consolidation phase. And again, I'm talking about oil prices. I don't want them to go too high because that would increase inflationary pressure. But I also don't want them to fall too low because that would mean the economy's collapsing. So if oil prices just fluctuate within a reasonable range, moving sideways, that's actually the best scenario for stock market investors. As for spot gold, well, with the recent statements from Fed officials, you can see that the expectation for a rate cut in December is less than 0.5. In other words, there's less than a 50% chance of a rate cut, so gold prices have dropped sharply here. But let me add a bit more on this. I've mentioned before that when gold prices are above 4,000, it's all about trading buys. If you can go long or short, you choose your own direction. But if you can only go long, then you need to be careful. Also, let me add that if you want to do well trading gold, you should probably look at the hourly chart before making your move. As an aid for your investment decisions. Why? Because gold prices are heavily influenced by futures, so you can't just look at the spot price and you can't just look at the daily chart. You have to use shorter time frames as a supplement. So let me explain this to everyone here. Also, a special reminder about Bitcoin. Bitcoin dropped sharply again on Friday, falling to $94,980. It stopped falling and rebounded on Friday, dropped again on Saturday, and then surged on Monday. But I want to remind everyone to be cautious here. It hasn't climbed back above $100,000 yet. That key psychological level hasn't been regained, so there's still a lot of resistance above. So everyone needs to pay attention here. We're not specifically talking about Bitcoin today. I'm just mentioning what I noticed online. There are some signs I wanted to share with you. If there is a rebound, you should be cautious and not just rush in impulsively to go long, thinking it's a sure thing. At the same time, if it suddenly reverses direction, either up or down, you need to be careful because it could be heading in the opposite direction. As for the Dow Jones, on Friday actually, the US stock market was pretty mixed, with some stocks rising and others falling. The Dow Jones dropped a bit more than the others. The S&P had a smaller drop, but the key point is that it still managed to close in the green, and looking at it, the main focus on Friday was still on the so-called tech stocks. So later on, we won't include tech stocks in our analysis. But to talk about Friday, it's true that the market stopped falling. However, if we look at the whole week, healthcare stocks actually performed better. And when you see that the better performing sectors are doing well, but financial stocks aren't doing as well, everyone starts to wonder, oh, what's going on? And you don't see the so-called non-core consumer, communication services, or information technology sectors among the top performers either. If these aren't leading, it means the market trend isn't good. Why is that? The top 5 sectors by market cap are basically information technology, communication services, non-core consumer, healthcare, and financials. So the more of these you see among the top performers, the better the market tends to be. So here you can quickly see that last week actually wasn't a particularly impressive performance. So the equal weight index had a slight drop on Friday. That's actually relatively good news. From the perspective of the equal weight index, it's more likely that the market will move sideways and consolidate going forward. This is actually a pretty good performance. As for the Nasdaq, it had a slight increase, 0.13. The most important thing is that it closed with a bullish candlestick and got back above the 50-day moving average, So what would be considered a better performance? It would be if today there's another bullish candlestick to firmly hold above the 50-day moving average, Now, for the Philly Semiconductor Index, the main point is that the leader in gains was Micron, then Rainbows, and there were 4 other stocks that rose between 1 and 1.8, On the downside, the ones that dropped more were Integris, and KLA, and actually some others were a bit weaker too. Even though it closed with a bullish candlestick, it actually finished down for the day. 6 stocks dropped over 2%, and 6 fell over 1%. The Philly Semiconductor Index is a bit weaker. The good news is the 50-day moving average seems to be providing some support. Similarly, when you see these bullish and bearish candlesticks appear, there is a stabilizing effect. But if you're asking whether it's going to make a V-shaped reversal from here, I'm not that optimistic yet, okay? I think it's more likely to be some choppy movement at the high end. So keep an eye on a couple of things. First, watch this week after NVIDIA's earnings report comes out. See if anything changes, okay? Second, look at, this is the one that caused trouble, Oracle, okay? After their earnings report is released on December 9th, will there be a chance for a turnaround? Okay, and third, of course, the thing I'm most concerned about, and I want to share this with everyone, the thing I'm personally watching the closest is the developments at OpenAI, because among all these companies, OpenAI is the only one without revenue or profit. For companies that do have revenue and profit to report, things are much easier to handle. For example, Oracle gets called out by everyone for possibly overspending on capital expenditures, but for companies without revenue or operations, what you're burning through is equity, and that's where the real pressure comes in. So as I just mentioned, there are 3 main points. The first one, first look at NVIDIA's performance after their financial report was released. Second, look at Oracle's performance after their report. Third, keep a close eye on what exactly OpenAI is going to do. You need to come up with something new so we can have a new narrative to follow. By the way, NVIDIA was up last Friday, and Microsoft also had a slight increase. The bullish candlestick they posted was actually pretty good. All right, and then Tesla was up as well, but the top for Tesla is still a bit obvious, However, it's getting close to the support level from the previous high at the end of May. All right, so there might be limited downside if it drops further, but the problem is, well, I heard their sales in China really aren't doing well, and that's a pretty big issue. As for Microsoft, it's still it's been fluctuating within a range, and compared to Facebook, there's actually a pretty clear contrast. Why? Because Microsoft sales are still pretty solid and steady. Whereas with Facebook, did you notice after the accounting was done, it was still questioned for having too much capital support? So Facebook and Oracle are actually 2 companies that should be compared. This time, they're the ones to really keep an eye on. I'm not that pessimistic about Facebook. It's just that the market is being more conservative, that's all. On the other hand, Apple has been performing pretty well. And why is Apple doing well? Actually, the biggest advantage is that it doesn't have AI, right? As for Google, it's also been getting weaker lately. But Amazon also took a big hit. Amazon is another company that's being questioned for its excessive spending in Japan, so the issues are kind of concentrated over these past few days. As for the rest of the Magnificent Seven, looking at things yesterday, it actually seems like, it's still a slight increase, though we just saw that a few of the end stocks are relatively weak. Overall, it's still a small uptick. So with this rebound, I think there's a chance for sideways consolidation, especially since the 50-day moving average hasn't been fully reclaimed yet. But the thing is, the 32,000 level, this round number, seems to be holding up as support. So if the market can hold up this week, it will be a good sign, meaning the opportunities ahead will be better. Now, as for NVIDIA and Intel, it still looks like they're fluctuating at high levels. After breaking through 40, they pulled back again. The key point is that your actual business performance needs to improve. Otherwise, no matter how much capital you bring in from outside, it's all just for show. The company actually has to make money for it to be real. Raising funds from outside just means you're waiting to burn through it all. If you're not making a profit, well, then Broadcom's also looking a bit weak here. Same situation here. I think Broadcom is actually a bit unlucky here. If you look at its fundamentals, I'm optimistic, but market confidence is a bit weak. But that's not necessarily a bad thing. If they keep a lower profile for now, they can wait until sentiment improves and then perform well when the market atmosphere gets better. Micron is still very strong because memory prices are still holding up. So that's the situation. It's showing a pretty strong performance, up another 4.17%. In a moment, we'll take a look at how US stock futures are doing. From what I just checked, it looks like it's a mixed picture in pre-market trading with slight ups and downs. Now, as for individual stocks in the after-hours market, there's been a bit of a change, so let's quickly take a look at this now. There's been a shift in the market. First of all, the not-so-great news is that these futures have turned bearish again. They flipped back to the downside. That's not ideal, especially since we finally had a bullish candlestick on Friday. Today, the futures are weak again, which isn't great, but that's okay. The main thing is to watch the closing price. If it's still weak, then it's likely we'll see a sideways consolidation. Like I said earlier, I don't expect a V-shaped rebound. A sideways consolidation is more likely. But what's the condition for a sideways consolidation? It's about the extent of the drop. I'll take a look at that tomorrow. At the close, the drop needs to be less than this 0.1 to 0.2 range. Ideally, there should be 1 or 2 rebounds for it to really count as sideways consolidation. Also, let's refresh the news real quick. As for the pre-market situation, this LB Albemarle, that's industrial gases. I think it's industrial gases or something like that. Basically a more specialized chemical sector. So that's been going up. And then MCO, that's Moody's. Its increase is actually pretty big, but I'm not sure what news came out about it. So that's a relatively large move. As for Google, it's been rising quite a bit lately. Why? There was some news, right? Buffett? Buffett. It's true that Buffett is about to retire, but Buffett sold Apple and bought Google, right? So since Buffett mentioned it, well, there's nothing you can do. After all, even though he's about to retire, he's still the Oracle of Omaha, so his performance is still pretty good. TKO is that the company behind UFC, the American Mixed Martial Arts Organization. It seems to be performing well. Xperia Travel ASPD Expediter, not Expedia, it's a different one. There are sexually transmitted diseases. This stock has been upgraded. This Regenerator Q and then XYZ. Let's take a look. BX, Blackstone, and then, okay, let's look at today's gainers. There are only about 12 stocks that are up more than 1%. So after that, the number drops off. So it looks like the breadth of this rally, the number of stocks going up is still not that high. It feels a bit on the weak side. Let's take a look at the companies that dropped significantly. There are quite a few matches as well. This dating app company is the parent company at Tinder. Don't get any funny ideas. Anyway, the parent company of Tinder is here, and then there's Dell. Dell dropped because it was downgraded, and then Dell, HP, and OEMs, that is the companies that assemble system cabinets, were all downgraded. So this area looks relatively weak and it's dragging things down. You can see that with Dell and HPQ, HP as well. And then another one, DLTR, the discount store that used to be really popular. It's taken quite a big hit. It seems like it's related to some commercial paper program or something. I'm not really sure what that is, so its performance hasn't been good, and it's been pretty weak lately too. So it's on the weaker side. Everyone's saying, yeah, it's not doing well. So this doesn't look like good news. Looking at today, there are already about 17 stocks that have dropped more than 1%, while earlier there were only 12 that had risen more than 1%. So judging from the current pre-market situation, things are looking more bearish. You can see that the bigger, more well-known names are also performing weakly. UPS, Lilly, and Supermicro, WDC as well. WDC was downgraded along with Dell, I think. And then BG, that's Bunge, the food company, looks like the soybean purchases from China are really bad, hardly any new buying, so it's hard to tell what's actually going on. Also, Apple is down, so that's not great. Both Apple and Tesla are falling, and the ones that had been going up before are now dropping. The only good news is that Oracle was only down 0.76%. So looking at it from here, the pressure from experience is a bit high. As for the US dollar and US Treasury bonds, they seem okay, and gold is also doing all right. Brent is also, in my opinion, fine, so that's about it. Also, there's something else we want to share with everyone. We've been keeping track of the Wall Street Journal's ratings, upgrades, and downgrades, so let's talk about that. Let's quickly take a look together, shall we? Last Friday, because the day before there were some companies that got upgraded. Gap was upgraded, MP, Mateos was upgraded, Nuco, and the steel company was also upgraded. Undis was upgraded as well, and they released their financial report. And then Spectra, if I remember correctly, is that energy company, like a gas company. Then TripAdvisor is in the travel and e-commerce sector. Simpler is also in energy. And this Spindra? Maybe I'm remembering that one wrong. Maybe not Quanta? This should be related to the concept of quantum computing, if I'm not mistaken. So there's still some. And then Cleveland Cliffs, looks like this steel stock has been upgraded recently. Maybe there's some turnaround happening? So tomorrow I'll check again and find some time to see if there are any better ones for everyone. Then Applied Materials got downgraded. Why? It seems like people aren't too satisfied with their earnings report. And then Adden Hills, Ard Health Energy, also got downgraded. They're about to announce their earnings, but instead they got downgraded, so that's a bit intense. Then Monopod Therapy. Okay, this one, some of these healthcare stocks are actually pretty hard to evaluate. Also, Progressive Insurance got downgraded, and StarHub, the company that sells tickets for games and matches, also got downgraded. Gambling. This one looks like it's a gambling website, probably online gambling. Also, it seems like Bitcoin department got downgraded too. So it looks like, yeah, there's still quite a bit of downward pressure on Bitcoin. Now, let's take another look. We've basically finished reviewing the market for today. So let's check out everyone's questions. Let's take a look. Someone said, Daju, hello, hello. And then, the new Taiwan dollar's long-term exchange rate is undervalued? Let me tell you, broker, don't take it too seriously. Back when we were in school, it seemed so important, right? But all I can say is, take a look. The long-term exchange rate, the new Taiwan dollar, has been undervalued for a long time. But let me ask you, which Asian country's currency hasn't been undervalued in the long run? From the American perspective, the yen is undervalued, the Korean won is undervalued too. And then, as long as there's trade, every time they'll say your currency is undervalued. So I think we shouldn't worry about that for now. Our real issue is that TSMC's share in semiconductors is too high. That's a fact. But the problem is, at the moment, you can't find a new direction right away. So you just have to let this continue for now. All right, then at the very least, you need to maintain TSMC's competitiveness and technological leadership in the semiconductor industry. That's even more important. Even if I only have one unique skill, I need to keep honing that skill, keep it going for 100 years. That's what we need to focus on right now. And as for Bitcoin, it's rallying again. I'm telling you, the technical chart is right there, you know? So there's nothing we can do about it. All right, the night session also dropped sharply. The memory sector is seriously affecting laptops and computer supplies. Actually, I think there's been some price increases, but whether it will have a huge impact, let's see how it gradually gets passed on. Maybe DDR4 and DDR5 will be affected. DDR5 is directly competing with HBM, right? So DDR, and because DDR5 is impacted, DDR4 is also affected, so lately the memory sector is still pretty tense. And according to our industry analysts for Taiwan stocks, this looks like, well, it looks like a situation that's gonna continue. That's about all I can say for now. Oracle can't afford to drop any further, that's for sure. It's a good thing OpenAI hasn't crashed yet, otherwise the drop would have been even worse. But the problem now is, if they can't come up with a revenue and profit plan that people can actually see, then this AI bubble, at least from my perspective, the doubts about the AI bubble just won't stop. Why? Because if you don't have revenue and profits to prove that your business can keep going, you can't just keep burning through capital to get by. So this is pretty important for us. Buffett bought quite a bit of Google. For Tesla, he sold it in China a long time ago. He was speculating on self-driving cars and robots. But with self-driving cars, progress in the US has been slow, and for robots, they can't mass produce them yet. I agree with you. Oh, but in China, their sales are really terrible. I heard it's only about 20,000 units, which is honestly pretty bad. And the Republicans are turning on each other, giving Trump a headache. There's really nothing he can do. Why? Because after the government shutdown and the tariffs, actually, the votes of the representatives are affected. Members of the House are up for re-election every 2 years. What does that mean? You barely have time to settle in before preparing for the next election. So everyone is under pressure. Google, for example, has great cash flow. All the companies Buffett mentions have strong cash flow. So Buffett often makes mistakes with tech stocks. Will it be the same this time? I don't know. Sigh, because basically he's already retired. Do you really think the companies Berkshire is buying now are still handpicked by Buffett himself? Or are they chosen by someone else and just shown to Buffett afterward? As for the decisions being made, I think it's more like the latter. Okay, we shouldn't call ourselves old-timers. Let's just say we're more experienced. Alright, today we should talk about the Dow Jones. Let me check the Bloomberg futures on my screen right now. Honestly, the bigger issue seems to be that it's not going up. It took a lot of effort for the market to show some signs of stabilizing on Friday, so today it really needs to close higher. ASICs? I think there's real long-term demand for them. For example, memory and PCBs. Let me tell you, I'm also very optimistic about ASICs, especially for our generation. There's a company, though I probably shouldn't mention its name. It's basically the leader in memory, you know? It's kind of like that company, Lianfa Textile. I've always been very optimistic about them, but it seems like their development progress is still relatively slow. So, as memory and these AI chips start to become more widespread, and as their performance gradually improves, Taiwanese manufacturers will definitely find their own niche. This has always been the case. Whether it's PC chips or mobile phone chips, Taiwanese people always manage to find their own advantage. So I still have confidence in AI chips. It's just that right now, things seem to be moving a bit slowly. But the thing is, by the time we Taiwanese get involved, AI might really become mainstream. Like how vegetable prices stabilize, you know? Anyway, that's a good thing. The main reason why AI doesn't seem particularly mature right now is because of this. Your motherboard is still quite large, and the whole chip still gets very hot and consumes a lot of power. But these are all signs of things that will be improved in the future. In the long run, this is good for Taiwan. So will AI stocks face pressure? Yes, there will be pressure. But in terms of industry trends, Taiwan still has opportunities. All right, so why would Ampere or Samsung target Taiwanese companies? Ampere is more likely to go after American companies. You should be more concerned if they go after Intel or Samsung. They're not going to specifically target Koreans. After all, we all have yellow skin. How can they even tell Koreans from Taiwanese? Right? All right, as for individual companies in the Taiwan stock market, I won't comment on them. I don't know which one will come out on top. It could be one of the established companies, or maybe a new company will suddenly emerge and become the winner. It could end up being a new powerhouse. We really don't know. I'm not trying to tell you that I know which companies or what's happening in the industry or who's working hard behind the scenes. I honestly don't know because I don't follow the industry closely. So maybe there is such a company, but I really don't know. Yeah. I think it's all possible, yeah. Oh, someone just typed a name in the chat. Phones, there's nothing you can do about that. Phones are in the past, but we'll have to see how things develop going forward. As for ASICs, I think, because actually it's not just by Gabe's company, there are others too. Over the past few years, they've acquired a bunch of subsidiaries, and you never know what's going on inside those subsidiaries. Some of them have already been delisted, right? Maybe one of their products will end up breaking through and making a name for itself, you know? Anyway, there's still customization, so I'm telling you, it's possible. Maybe they'll do it through a subsidiary or some other method, and after they succeed, they might just let it go. All I can say is don't just write them off. Maybe it's all part of their group strategy. All right, so, okay, it looks like there aren't actually any new questions coming in at the moment. So that's about it for today's show, I guess. We'll see you again tomorrow. Bye-bye for now.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.